Hi friends, welcome to another video in this prediction video series. First on my list is Bank of Baroda. This is the stock chart of Bank of Baroda. The stock is in a downtrend, making a lower low and lower high pattern. A lower low and a lower high pattern. And this pattern is not violated yet. How can you understand? The lower low, lower high pattern is not violated yet because this lower high here is not yet broken by this move here. Okay, so we have our downtrend intact. Now that gives us opportunities to trade on the short side. How is the price behaving most recently? To analyze it, let's focus on this portion here. The stock price pushed higher from this support level, made a retracement, and once again pushed higher into a level of resistance, into this level of resistance. From this resistance level, we have a retracement, this retracement giving us a shorting opportunity or an opportunity to go short on Bank of Baroda. Let's see how to spot this shorting opportunity. For a more clearer picture, I am dropping down into a 1 hour time chart. This is our 1 hour time chart on Bank of Baroda. I want you to focus on only on this portion here. We have a lower low closing, a lower low closing, and a pushback into its resistance level, and a solid negative candle from that resistance level. A lower low closing, a pushback into that resistance level, and a push down by making a solid negative candle. This is our solid negative candle, which gives us this kind of a setup. So in this case, we are expecting Bank of Baroda we are expecting this out of Bank of Baroda. Okay, to have conviction in our trade, let's see if we can have any solid references. Let me switch to a 4 hour chart. Take these off. Minimize it a little bit. Okay. We have an ABCD here. Make a clone of the AB leg and the D point termination is approximately at this level. Let's mark this level with a green line. Okay. Next, Fibonacci retracement. Let's make a Fibonacci retracement of this whole move from this point into this point and see where we get this 0.618. We have our 618 lined exactly where the D point on the ABCD terminated. So that's interesting. So we can consider this point or this small tiny zone a pretty strong zone from where the prices should have retraced or reacted. Okay. Now once again, let's drop down to a 1 hour chart. This is a 1 hour chart, and there is an RSI divergence on this 1 hour chart. Look at this portion here, and switching to a line chart, we can find this slight move to the upside, while here although this point made a higher high here, there wasn't a higher high on the RSI. So that is a negative indication. Okay, so we have an RSI divergence at this level on a 1 hour chart. Let's now switch back to our 4 hour chart. Okay, so all these clues or all these gives us enough clues that the stock might be heading lower to its next support level. What are we expecting? We are expecting this to happen. We are expecting this to happen. So we have our setup in place and we have our references to support our trade. Now let's pick our target placement tool and see where can we place our targets and our stop loss. Assuming the market opens somewhere here in the next trading session, we can keep our stop loss just above. We can keep our stop loss here, and our first targets would be this. Assuming the market opens here in the next trading session, our stop loss would be this and our targets would be this. Okay, so let's see how this trade plays out in the next few trading sessions. Biocon is our next shorting opportunity to look out for the next week. we have a favorable cipher pattern on Biocon. Always remember, we get advanced patterns during consolidations. We get advanced patterns during consolidations. After making this move here, Biocon made a lower low retracement, then a move up, breaking above this lower high, once again pushing down, and again breaking through this lower high. What does this zigzag move mean? You can close your eyes and tell it's in a consolidation, right? Yes. Now this is where we search for advanced patterns to trade. And fortunately, we have got one in the form of a cipher pattern. Let me draw and illustrate it to you. This is our X to A leg, our A to B leg, B to C leg, and the 786 termination at approximately this point. So let me expand this chart a little bit. So this is our cipher pattern. So once we have identified the setup, next is to look for references to support our trade assumption. Okay, on this 4-hour chart, we have an indecision candle right at the resistance level, followed by a strong bearish candle. This 2-candle setup is called a bearish engulfing pattern, and when such kind of patterns happens on a resistance level, it has got negative implications. So that is our first favorable reference, a bearish engulfing pattern right at a level of strong resistance. Okay. Secondly, let's drop down to a 1-hour time frame. Let's remove this for the time being and this for the time being. Focus on this move here. Focus on this move here. We have an up move, a retracement, a second up move, a retracement, and a third up move, and that retracement on the third up move is in progress. In most cases, when we have 3 such harmonic moves, there is a possibility for this retracement leg to break below the most recent lower high. Once again, in most cases, when we have 3 such harmonic moves, there is a very good possibility this retracement move here would break below the most recent lower high. So we are expecting this leg to break below this most recent lower high. So that is our second favorable reference. Thirdly, we have an RSI divergence at these higher highs. Let me show that to you, but before that, let me get these lines off. We have an RSI divergence at these higher high levels. This is the point corresponding to this point, and this is the point corresponding to this point. So you could see there is a clear RSI divergence at these levels. So that is our third favorable reference to support our trade. Okay. So let's switch to a 4-hour chart. And let me draw the cypher pattern setup for you. Our X to A leg, A to B leg, B to C leg, and our 786 completion. This is our cypher pattern. Now let's see where can we place our targets and our stop loss. We have this setup in place and we have solid references to support our trade. Now next step is to place our targets. In case of advanced patterns, as I have mentioned before, 0.382 and 0.618 are considered to be the first and the second targets respectively. So let's pick this retracement tool and mark our first target, that is the 0.382, and our second target 0.618. 0.382 is our first target and 0.618 is our second target. Our stop loss has to be placed just above this most recent high. This is our most recent high, so our stop loss has to be placed here. It's an approximate stop loss, but let's place our stop loss a little bit higher. So now let us pick our target placement tool, assuming the markets to open somewhere here in the next trading session. This would be our stop loss. This would be our first target. Our second target would be this. Okay. So let's see how this trade plays out in the next few trading sessions.